We saw the dollar end on a bullish note last week, closing well above that November trend line. So how is that going to affect pairs like the EURUSD, the Pound USD, dollar CAD, and also gold for the week ahead? That's what we're talking about in today's weekly forecast. We'll talk key levels and also targets, as well as some key events to keep an eye on next week. Now, before we get to that, I do want to mention a new offer I have with my preferred broker, Blueberry Markets. Click on the link at the top of this video, and you'll be taken to this page where you can get started with them and deposit $100 or more to get lifetime VIP access. Plus, once you trade one lot, a minimum of one lot, you are going to get a 30% trade credit or bonus. What that means is that if you deposit $1,000, they're going to give you a $300 bonus once you trade that one lot. All right, so it's an incredible offer, guys. You'll also get, again, VIP access for life. That includes daily videos, my help with your trading, and also the ability to see my trades in real time. So click on that link in the description of this video to see this offer. Okay, so with the DXY, what I'm watching for the week ahead, again, we had the market breakout from this descending channel on Friday. All right, so the key for the DXY in the week ahead is that it is still below 104.45. So you can see this level back here off of these highs and lows, and this is exactly where the market ended last week. So technically, we do not have a confirmed break above 104.45, but what we do have is a break from the top of this descending channel. So you can see off of these lows back here, this one, and those highs, we do have a confirmed break above this area. Okay, so for the US dollar index, what I'm watching for the week ahead is a new range here between the area around 104.45 and 104. Okay, so you can see that this area back here has been a pivot for the DXY. This is what we've talked about for a while now, and you can see this candle on FOMC, right, that took that out. The very next day, it gapped down, filled in the imbalance down here from this breakout candle, and we got the move back above 103.8. Okay, so this area down here, 103.8 to 104 is going to be support for the DXY. Of course, we have 104.45 being resistance for the DXY. Okay, so this is your range right here to start the week. And if we do get a sustained break above the 104.45 level, then we're looking at a move toward 105 and the 106 region. Okay, so that's what I'm looking for in the week ahead. It's a matter of, can the market get above 104.45 given the bullish move that we saw at the end of last week. The one thing that you do have to be a little bit careful of is that this was a Friday breakout. Okay, a lot of the stuff we're talking about in today's video, including the euro and the pound, were also Friday breaks, and they tend to be lower volume. All right, so keep that in mind for the week ahead. But all in all, right now, the DXY, we do have a confirmed break above that 104 area, and you can see that it is looking relatively strong, right? We had the move early in the year, right? The impulsive move up. So far, we've had a correction lower, and this looks like potentially the start of the next impulsive move following that reclaim at 103. And look, I know a lot of people doubt this. A lot of people don't want the dollar to move higher, but that doesn't mean that it won't. We have to trade what's on the chart. And again, right now, we do have the start of a breakout from the dollar. Okay, now before we go on, let's take a look at the calendar for the week ahead. And overall, guys, it's a pretty light week for the week ahead. We do have some event risk here later in the week that is going to move markets. So really Monday, very light, right? Nothing really as far as heavy impact news, or high impact news. But on Tuesday, we do have some consumer confidence. Could move the needle a little bit from markets, but not too much. And then here on Wednesday and Thursday, we do start to get into a little bit more as far as some Fed speak here on Wednesday, but really Thursday is going to be the big day to watch along with Friday. And the reason for that is going to be the GDP numbers, the final GDP numbers out of the US here on Thursday. So this right here is going to absolutely move the needle for the dollar and risk assets. So that's going to be something to watch. And we also have, of course, pending home sales. That could be significant as well. And then this right here, core PCE and also Powell speaking. This on Friday is also going to be significant. So really what you can say is that the first half of next week should be pretty quiet for markets. So don't expect too much movement from at least the US dollar. But later in the week, we are going to get some data that could really start to move these markets, especially for the USD. Okay, so with that in mind, let's take a look here at the EURUSD. And this is a breakdown that when you look at the EURUSD chart, it looks relatively innocent because you can see that the market, even though we got a significant move here to end the week, the market is still technically just range bound. Okay, so really no change as far as that's concerned. But the real damage here, and I mentioned this in a video last week talking about the EXY, the Euro index, is looking at the EXY, okay? This is where the real damage was done last week, where you can look here at the weekly time frame going all the way back to this low from 2022. We have these lows through here. We've got all these weekly closes. This is the weekly chart. Keep that in mind. And we have the high up here, okay, from 2021. We've got this high, this one right here, and this one recently. So we do have a huge triangle pattern that is formed for the Euro index, the EXY. This right here, this is why the Euro has been so indecisive this year, because the market was coming in to the apex of a multi-year consolidation pattern. Now, what's concerning for the Euro is that we did get a weekly close below this level. Now, you could make the case that this level is a little bit lower, okay? But I'll explain in a moment why that might not be the correct placement here. So as far as resistance goes, you can see this level up here was never breached on a weekly closing basis. Now, this level down here, you can see these two lows right here, and this is why I have it placed where I do. These two lows right back here, and you can see where the EXY never closed a week below this level until last week. Okay, so this is the concern for the Euro moving ahead, is that as long as the EURUSD is below this area around 1.085, okay, so this region up here, if it stays below this on the higher time frames, then that coincides, all right, pretty close with this level up here on the EXY. Now, if it were to reclaim that, of course, that would be different. If we saw the DXY break back below, 103.8, 103.6, and the Euro close back above this area up here, okay, do something like this, the EXY reclaims that support it lost last week, things like that, guys, then of course I would flip my bias, right? This is not set in stone. There are no guarantees. But as of right now, this is a confirmed breakdown. And I have to go with what's on the chart. I can't go with what I think might happen or what I want to happen. I have to go with what's on the chart. And right now, this is a confirmed breakdown. Okay, and again, you could draw this a little bit lower, all right, down here toward some of these lows through here. Okay, but the issue with that is that you start to ignore some of this stuff right back here. Some of these lows right here, you start to ignore these if you move this level lower. And that's kind of why I think that the correct placement here is this region right through here to include those two lows, right? So you can see that through this area, again, the market never closed below until last week. This was a breakdown, all right? And furthermore, this is confirmed by what we're seeing on the pound, which we'll talk about next, okay? So with the EURUSD, guys, wrapping that up, knowing that the EXY just broke a potentially significant level with this move late last week, what I'm looking for this week is a potential retest up here in this area, okay, which could coincide with the DXY testing 104. All right, so potentially a move up here in this area while it's above this pivot right here around 1.08 or so. Of course, if we were to get a sustained break below here, then we're looking at a move down here toward these lows and potentially 1.0635. All right, but all in all right now, we do have a confirmed breakdown from the Euro, and this area right around 1.0865 is going to flip to resistance in the week ahead. All right, now let's take a look here at the pound, and this is why I mentioned that it does kind of confirm what we're seeing from both the DXY and also the EXY with the Euro, because the pound right now, you can see, did close back within this massive descending channel that we have talked about now for weeks. Okay, so off of all these highs up here, you can see where the market last week closed back below. Now, if you guys have followed me for a while, you know that fakeouts like this, especially ones this significant, tend to produce extended moves in the opposite direction. So what that means is that this up here is a fake out in the sense that bulls were not able to hold the market above this level right around 1.264. Okay, so the fact that last week closed below means that flips to resistance. And furthermore, right, the real damage here is that a fake out like this within a pattern like this tends to produce a extended move in the opposite direction. Okay, so we'll see how this goes. But for now, 1.264 for the pound is going to be critical resistance. Okay, so this level right up here is now flipped to resistance. Now it could be a little bit higher, okay, but as long as the pound stays below this on a daily closing basis, then I am bearish here. I'm also still short from this last week, which I mentioned in the VIP group. So I will be looking to add to that position, full disclosure, if we get a retest up here in this area. Of course, if we get the pound breaking back above here, okay, back above this area, the DXY breaking down, etc., especially above 1.27, these highs back here. Really, this is what it would take up here for the pound to negate what we saw last week. It would have to close back above this area in order to negate this breakdown. All right, but for now, again, we can't trade what we want to happen or what we want to see. Really, we have to trade what's on the chart. And right now, what is on the chart is a failed breakout or fake out from the pound up here with 1.264 coming in as resistance. And of course, support down here between these lows and highs right around the 1.25 area. All right, so overall looking pretty bearish here for the pound. It could change, but as of right now, guys, I am leaning bearish for both the pound and the euro. All right, so next up we have the dollar CAD, which is still moving sideways this year. And by the way, guys, if you are enjoying this content, if you're getting something from it, be sure to subscribe to the channel and click the bell icon for notifications, because I'm putting out videos every single weekday, including these weekly forecasts on Saturday. We also have, and don't forget too, guys, be sure to smash the like button, show your support for me making these videos. All right, so looking here at the dollar CAD, right, we have the market coming off of this fake out to start the year. So we talked about this a lot back here, where you can see this trend line. If we go to something like the 5-day, okay, and move out here, you can see where, first of all, the dollar CAD has moved within a massive range for the past almost decade. And this trend line down here off of these lows, you can see where we did get a confirmed fake out to start the year. Okay, so I was flipping bullish on this market through this area on that fake out. I made a few videos about it. We talked about it in the VIP group, and I'm actually still long from that reclaim. Okay, it's been a long trade just because the market has been so sideways. I've taken a little bit of profit here and there, but ultimately I am still long from this reclaim right back here. And so far, the market obviously has been very sideways within this ascending range. Okay, now if we get the DXY breaking higher, okay, dollar strength, that's going to be key. And this market can break above 1.36 to 1.365, this area right up here. If we get a sustained break above 1.365, then that is going to confirm the breakout here and expose areas like this one up here around 1.375, and then potentially that macro resistance up around 1.387. Okay, so this is a critical level here for the dollar CAD going back a very long way. So you can see that we have the lows from back here and all of these highs. Okay, so a break above this area, okay, 1.36 to 1.365, a break above here is going to expose that macro level, which, like I've said before, specifically on like the dollar yen, with that macro level that we've looked at, these areas tend to serve as magnets. Okay, now it's not a magnet right now because the market is still below resistance. So you don't want to go long into dollar CAD into a resistance area like this back here. Okay, so we need the confirmed breakout above this. If we get that though, then I will be targeting higher levels. Of course, there's also the chance, given what we've seen so far this year, that the market just continues within this range. Okay, so keep that in mind, that this area is still going to be resistance until we get the confirmed break above. All right, so let's go ahead and move on here to gold XAUUSD, because this video is getting rather long, but there is a lot to cover. Okay, so with gold, guys, I mentioned this last week going into FOMC, and what I mentioned was the potential for a liquidity trap setting up here for gold. Now, so far, we have not seen that materialize, and what I mean by liquidity trap here is these candles right back here, okay, specifically these breakout candles that took the market above this area back here around 2075. Keep in mind that 2075 was the highest daily close for gold going back several years, okay, and even back here in this area. So these candles right back here are the ones that broke gold out of that area, right? And we have not seen a retest down here. Now, it doesn't mean that we will, but the one thing you have to keep in mind is that big green candles, especially breakout candles like these back here, do tend to serve as magnets for price. And that's because market makers want to have the most liquidity involved in these moves, okay? And when you get aggressive moves like this, okay, on these two candles, and there is no retrace on the following candle, okay, no retrace at all really, then there are going to be open buy orders down here. So there is liquidity that was left on the table down here in this area. And again, markets seek liquidity. Market makers want that liquidity involved in these moves. So that's why you tend to get, you think about fair value gaps, things like that. That's why these tend to develop and why they tend to serve as magnets for price. But the key for this, and I mentioned this last week too, the key for this is going to be a sustained break back below 2140. Gold would have to get back below this December high and these lows here on a daily closing basis to open up these two candles back here. Okay, if we were to get that, then we're looking at the retrace down here toward 2075 or so. Okay, but as of right now, we do have a range-bound market. Now, the one thing though that you do have to be careful of if you are trying to long gold is this candle right here on Thursday, because we saw a significant move following FOMC. However, gold was unable to hold above it. Okay, so looking at the 4-hour time frame, right now, this up here is a fake out. Okay, it's an intraday fake out, so it's not as significant as something on the daily. But this up here, you can see the highs right back here. Okay, we got the move above and the close right back below. So this is technically a fake out. Now, looking here at the 4-hour, you can also see where this is an imbalance right now because we got a very shallow retrace following the move down. Okay, so this up here is where your imbalance is for gold. So what I would be very careful of is I would be very, very careful of trying to short gold if we were to get a sustained break below 2140 before we get a move up here. Okay, and the reason for that is because, again, this is an imbalance up here right now. And so if gold were to move lower this week and just close below these lows down here, then it could just set up where it closes below, closes right back above, comes up here and retests, and then you get the move lower. Okay, so you've got to be careful with trying to short this below 2140 without a retest up here first. Now, you've also just got to be careful trying to short this with the market going on a tear like this, okay? We could just see the market reclaim this area up here around 2195, all right, reclaim this and head higher toward the recent high and then potentially some psychological levels from there. All right, now targets are going to be hard to come by above this area because, again, that would be a new all-time high for gold. But right now, guys, I would be careful trying to long this with these imbalances below 2140, all right? Just my opinion, I could be totally wrong here, but for the week ahead, to kind of wrap up here, what I'll be looking for is potentially a move down here. Maybe we see gold sweep these lows, and then a move up here toward this imbalance, followed by that move lower. Now, this is a range, right? So play the range as long as it's there, and you can see where this wick up here, this is the imbalance that I'm referring to right around 2200. Okay, so play the range while it's there. But again, if we were to get the move up here and then the break below 2140, then shorts toward these two candles back here seem to make a lot of sense, all right? But again, you've got to be careful. We do have a bullish move here from gold. These are new all-time highs, right? So you've got to be careful anytime you're shorting a market like that. Be sure to subscribe to the channel and click the bell icon for notifications. Don't forget to sign up with Blueberry Markets, deposit at least $100 to get lifetime access to VIP. See the link in the description of this video, or if you're on the website, click on that broker link at the top of the page. Enjoy your weekend, and I will talk to you again on Monday.